If you subscribe to the debt is dumb and cash is king philosophy, this video is going to get you thinking just a little bit differently about why you should take out a home equity line of credit. Stay tuned. I believe that every single homeowner out there that has the ability to should also have a home equity line of credit. Let me ask you a profound question here. What is the difference of having $10,000 in cash sitting in a safe at home, sitting in a money market account, or sitting in a savings account as your emergency fund, or this same amount sitting in your home equity with a HELOC that gives you the accessibility of that same amount of money? I maintain that every single homeowner needs a home equity line of credit, and here's why. Number one, it can function as an emergency fund if needed. Granted, it's great having money sitting on the sidelines in case you need it in the event of an emergency, but that same amount of money sitting in your home, paying down some of your mortgage, will actually accelerate the amortization table of your mortgage, allowing you to pay significantly less interest over time. And every single payment that you make thereafter, more and more of the money is going to principal, not to interest. If you're interested in finding out more about how a HELOC can actually be used as a checking account, visit theshredmethod.com, where I go into great detail about why you need to understand this process, this method, this philosophy, and how many hundreds of thousands of dollars you can save in the process. Here is what you're looking for in that HELOC. Number one, there's a big difference between a HELOC and a home equity loan. A home equity loan is a product where the lending institution will advance you a certain sum of money, and then you have a fixed payment over a period of time until that loan is paid back. That is not what we want. What you want is a home equity line of credit, or a HELOC. The reason that you'll know it is a HELOC is money can go in and money can go out very easily. So if you have an online banking portal and you can go out there and move money from the HELOC to checking and checking back to HELOC, you have a true home equity line of credit where the money is accessible to you no matter when you need it. The key to these HELOCs is, number one, the interest rate. And some people will ask, does it matter if it's fixed or if it's variable? And generally my answer is this: it only matters if you're carrying a significant amount of money on that HELOC at any given point in time. So if you're carrying $15,000, $20,000, $30,000, $50,000 on the HELOC, then obviously having a fixed rate is probably beneficial to you as opposed to a variable rate, which might fluctuate month after month or quarter after quarter. The really important facet that you're looking for is the ability to transfer money easily in and out whenever you need it. One of the questions that I often get about a HELOC is, can they be called? Can the bank or the lending institution call your loan? Meaning, can they shut down that HELOC? The simple and short answer is yes, of course they can. The longer answer is this: if you're doing a HELOC with a national bank, the prospect of them calling that note or closing your HELOC is higher than if you were to get your HELOC through a local bank or a local credit union. The reason being, those national banks, the US banks, Bank of America, Wells Fargo, Chase, they have more exposure on the coasts. So they have homes, properties that they've mortgaged out in California and New York and Florida. And when property values go sky high in those states, people will often tend to go and get a HELOC on those properties and leverage up. So when they make a decision about calling HELOCs, generally speaking, they're calling it nationwide. So if you can, go check out a local bank or a local credit union and get your HELOC, remember, not your home equity loan, but your HELOC from a local lending institution. So there you have it. This is the reason why I think every homeowner needs a home equity line of credit. Number one, it's great in case you have an emergency. It's liquidity, it's accessible. It's just like having money in a safe or a money market account, except that it's hidden in your home equity, which is allowing more and more and more of your mortgage payment to go to principal, not to interest. Remember that where you want to get this HELOC is a local bank or a local credit union, not from a national organization. And this is not a spend account. This money is there strictly for emergencies, or if you want to learn more about how to use it as a high-powered checking account, make sure you check out theshredmethod.com. If you like these videos, click like, click subscribe, make sure you're notified when we put out new ones. Here's to mastery, and here's to seeing you on the other side.